The oil price and commodity sell-off during this Q4 and Q1 of this year has had a pretty significant impact on the Middle East. In terms of bond issuance volumes are down over 40%. Investors were very concerned about the impact it would have on the government budgets and as a result the underlying growth rates. But having said that, since March we've seen a renewed appetite for credit from Middle East, and we think there's a very positive attitude appearing, and through the course of this conference we've had a lot of investors looking to get back into the Middle East and start to invest both here in the UAE and across the GCC. The change from the Fed at the beginning of the year around their interest rate policies has had a very significant impact on emerging markets globally. There's been a renewed appetite to invest in EM, and we've had some major transactions appear since the change in stance. For us, we think this is really significant, particularly since we have a low growth outlook for many years. Having a stable interest rate policy has given the opportunity for emerging markets to start performing again. Currencies are strengthening and foreign investment is flowing back into emerging markets and particularly into the Gulf region. As we sit here in April, I think it's an interesting time. We know that there are several issuers looking to come to the market at the end of April and in May. We believe that the market is going to be reopened by some large issuances from the sovereigns, both in the GCC, but more broadly from emerging markets. We've seen some of those transactions this week already, and we think the issuance volumes are going to pick up pretty quickly. Following the sovereigns, which tends to be naturally, you have the financial institutions who have for some time suffered some liquidity pressure. So we think from the wholesale funding side, they'll start reaccessing the markets, both in bonds and loans. And then we'll probably start to see some of the corporates appear. And ultimately, we'd be keen to see some of the higher yielding issuers coming back. After a pretty successful 5 years of growth, we would like to see them start coming back after the summer.